Deserted shopping malls, half-empty apartment complexes, abandoned construction sites. These are all signs of the crisis that has gripped China's property market, and also an illustration of how dramatically the fortunes of this sector have changed in the last few years.
Homebuyers are afraid of not getting the home that they paid for.
The problems China have now are deep-seated structural ones.
I think the consensus is already that for China, the property sales may not go back to yesterday.
China's property market is in a bunch of trouble. And because property is the single biggest contributor to China's GDP, when the property sector is in trouble, the rest of the economy is in trouble as well.
To understand why the property crisis has happened now, you have to go back a few years. In the early 2000s, there was an enormous construction boom here. Skyscrapers, apartment complexes, they were going up everywhere. There was this fundamental belief that property prices could only go up. That belief has been shaken tremendously, and when you speak to people now, there's a real worry that maybe what follows a boom is bust.
要买的话买不起，因为现在房子很贵的。
你像北京这么高的房价，还挺可怕的。这个泡沫将来要是崩的话呢，好多人高位接盘的话，肯定会引起不安定因素。
The privatization of property that began in the 1990s created one of the largest explosions of wealth in the country's history.
China's housing stock was dilapidated and low quality. Many people living in worn-out dormitories or housing provided by their state-owned enterprise or government ministry. China was urbanizing, with tens of millions moving from the countryside to the city, and China was getting richer. All of these things together would already have driven an enormous boom in China's real estate. The trouble was, other factors also contributed.
Domestically, the stock market has been tumultuous. There have been people who have made a lot of money in the stock market and also a lot of people who have lost a lot of money. At the same time, property was steady. It just continued going up, up, and up. And so people began buying homes, not to live in them, but as a way to invest their money.
For years, there have been warnings about the borrowing binge and the building binge in China's property sector. Chinese developers would launch a project for pre-sales, get the money from the home buyers and immediately invest a sum of money into new land parcels to keep expanding. And all worked fine until sales suddenly tumbled. New cash stopped coming in and developers find they don't have enough cash to finish the construction of homes previously pre-sold. The build-up of the bubbles went on unchecked, but as long as people kept buying and there's a lot of investment demand snapping up the oversupply of housing, investors and developers felt great. That's until the party stopped.
In comes Xi Jinping. In the beginning of his second term as China's leader in 2017, he really starts putting his shoulder into this mantra that homes are for living in, not for speculating on. China's efforts to tighten regulation over its developers culminated in the unveiling of what's become known as the Three Red Lines policy in 2020. It greatly limited the ability of those firms to get financing. A lot of smaller companies ran into trouble almost immediately. Then Evergrande, once the country's biggest developer, warned of a potential cash crunch. A year later, it was in default, sending shockwaves through global markets.
The day has finally come, Sherry. We've been circling around this, what has very recently felt like a complete inevitability, right? But Evergrande now declaring officially in default.
Problems at Evergrande were well recognized. Hedge funds had been shorting the stock for years. The surprise, though, was the shift in government policy, from standing behind the debts of big property developers to allowing them to go under.
Dozens of private developers have since collapsed, raising not only questions about the future of the property market in China, but about the health of the entire economy. The latest to struggle, Country Garden, was once the country's largest developer by sales and a company many saw as too big to fail.
Country Garden, obviously the latest poster child of the property sector woes.
The fallen fortunes of Country Garden you can basically see in a 10-year chart.
The two-debt crisis is very different. Country Garden has over 3,000 projects across China, and that's 4 times Evergrande. For Evergrande, when it went bust in 2021, the government can still call it an isolated event, and it's due to the company's own management and reckless expansion. For a developer of Country Garden's status to stumble, it's more detrimental to sentiment because it's telling you that something's fundamentally wrong with China's housing market that's pushing even formerly healthy developers to the brink of collapse.
As the developers suffered, construction stopped. Home buyers realized the properties they had already paid for, had taken out a mortgage to buy, were not being built. Anger and protests grew.
This is really the big concern throughout all of the kind of crackdown, is whether or not we're going to see social unrest and financial instability.
The government has stepped in to push banks to continue lending to developers so that they have the money to finish the homes that they've already sold and make sure that those homes are delivered to the buyers. The government has also stepped in to ask the banks to lower the interest rates they charge on mortgages.
国内市场潜力大，产业基础雄厚，发展空间广等优势明显，长期向好的基本面没有改变。
80% of the wealth of the average Chinese household is tied up in their homes. When that home price goes down, they feel poor, they spend less, and that has been a real drag on the economy this year. The risks to the financial system we've already started to see. Zhongrong, a big trust company here in China, $1 trillion under management, has not been able to pay some of its products when it comes due because they lent a lot of money to developers and they themselves have not been paid.
If we start seeing problems in China's banks, if there are concerns about a Lehman moment for China, what we could see is a global risk-off moment for financial markets. It wouldn't just be Australia and Chile and the other commodity producers that will be suffering. It would be the big financial centers here in the United States, in London and elsewhere.
When Lehman Brothers collapsed in 2008, it marked the beginning of a global financial crisis.
We've had a historic day on Wall Street. Lehman Brothers, the 158-year-old firm, filed for Chapter 11 protection in U.S. bankruptcy court today.
But there are some key differences between what happened then and what's happening in China today.
Banks in China are much more straightforward in their operations than the Wall Street whiz kids that contributed to the global financial crisis. China's banking system has very ample sources of funding and has the government standing squarely behind it. Does that guarantee that China will escape a financial crisis as the real estate sector collapses? No, but it gives them a fighting chance.
If China's economy stumbles, the global implications will be far-reaching, touching anyone who's benefited from having the country as a supplier or as an end consumer. Geopolitically, a weakened Chinese economy could force Beijing to reconsider how it pursues its rivalry with Washington. And if other nations begin wondering whether China is a superpower approaching its peak, the way the world deals with Beijing may be in for a lot of rethinking.